James, we had Reeves saying in her speech last week, or at least hinting, that she was going to break the manifesto. Then it seemed she wasn't going to raise income tax in the budget, and now we've got these latest developments on forecasts. What's going on? What's the thinking behind all of this?
Well, to understand the thinking, there are three constituencies you need to bear in mind: the public, Labour MPs, and the markets. Reeves is trying to keep all of them happy. And so that was why 2 weeks ago she started saying tough decisions need to come. And that led to lots of speculation, even from her own backbenchers, that a manifesto break, a break of her election pledges was coming, and that would be income tax. Now, the markets and business took that very well. Her own backbenchers did not. And what can't be escaped is this has been an awful week for the government. You have had rumours of plotting. We are now in a doctor's strike as of today, and the Prime Minister has seen a low polls, making him one of the most unapproved of Prime Ministers in British political history. That led to this bombshell report we had last night that income tax was being dropped. Markets did not like that an hour ago, and within an hour, government sources have spoken to Bloomberg and saying the forecasts have improved, and they now are expecting to have between 15 to 20 billion pounds of headroom at the end of the budget. This is a balancing act as the government goes between those three constituencies I mentioned, trying to keep all of them happy. The question is, can it?
And how is she likely to balance the books here? If it's what tax levers or spending cuts are available to the Chancellor at this point, pleasing as many of those constituencies as possible?
We can kind of see the markers at this point. Imagine a tank, if you will. We started with £10 billion headroom. We know the welfare backfiring over the year loses about £5 billion. We expected the OBR downgrade to lose somewhere within 20 to 30 billion based on our reporting. And now we're told that without income tax, she's still going to end up somewhere between 15 to 20 billion. That's according to our latest reporting. It all might change by the budget day. That leaves a roughly, give or take, a kind of 30 billion hole to fill. That we are hearing that salary sacrifices and a cap on those, which has been reported, so that's how much employees can put in tax-free into their pensions per year, could be a good way of getting to that. There are others on the mix. You could imagine, say, an EV tax has been floated, a tax on limited liability partnerships, gambling and betting companies. At one point, a bank tax had been effectively ruled out, but it's worth saying at this point, with the Treasury looking to raise money, a lot of these smaller, sort of low-digit billion-raising options are back on the table, and the focus for us and the team here is reporting what might be in the budget in 2 weeks' time. OK,
Bloomberg's James Woolcock, we thank you so much for breaking that down for us. We're looking at gilt yields still up 6 basis points on the 10-year. They were up about 13 basis points at the start of the session, so pairing some of those gains now.